This is a panel about crypto and real estate. How many of you guys are interested in this topic? By the rise of hands? Okay. And Ricardo mentioned it a little bit at the beginning. As you guys know, we've launched with the leadership of Eric, our real estate crypto division, which has been working very hard between our staff, our affiliates, and everybody to start bringing you the best options into how to work with crypto. And what I'm going to do is I'm going to introduce Katherine, and Katherine will introduce the rest of the panel because I know that's part of what she's doing. I'm just making a little bit of time to see if I can show the video. Yes or no? I'll do it at the end, after the panel? Okay. So Katherine Kallergis is an amazing editor and journalist who you guys constantly read in The Real Deal. And she's a good friend of us, and she covers our stories very well. We love what she does and for the real estate community here locally. And we are super honored to have you moderate this panel with us today. I know crypto and tech and AI and innovation is part of what drives you and you're passionate about. So you're going to do, you're the perfect person that we could have chosen to moderate a panel with amazing experts that are working something that already is, blowing everybody's mind, and it's at its infancy of what can be done. So you're going to see a lot of great stuff of something that's continued to evolve that we're in the forefront of doing. So Katherine, I'm going to give you the mic, let you introduce everybody else, and I think it's going to be a fun way to end the event. Thank you guys, and go for it.
Great, thank you all. So I want to open it up. We're going to talk about crypto, obviously, and real estate. How many of you have cryptocurrency or have held cryptocurrency? Okay. And then how many of you have done deals involving crypto, real estate sales? Okay, so fewer. Okay. Eric, have you done any? All right, so we're joined today by Eric Mendelson, crypto expert and recent head of the crypto division at Avanti Way. We have Ricardo Terán from FOLIO and Colin McMahon from Milo. So we'll give a round of applause to our speakers. These are the experts. So in many ways, a crypto real estate deal is not that different from a normal real estate deal. Is that right, Eric? Can you kind of break it down for us?
Yeah, before I get into that, I have a question for everyone. If you had a seller who was interested in accepting Bitcoin for the transaction, or if you had a buyer who had Bitcoin who wanted to use it for the transaction, how many of you in this room right now are comfortable and think that they can execute that type of transaction, either on the buy side or the sell side? How many of you think you have the skill set to do that? Not many. This is why we created the division, this progressive division at Avanti Way, to teach all of you how to actually go out there and execute these type of transactions, which, as you just mentioned, are really not that different from how we execute transactions every single day. All of my transactions where I've represented the buyer have settled in cash because the buyer is taking a loan out against their cryptocurrency to execute the deal. They're taking a loan out against their crypto. It's being paid in cash into their bank account, wired into their bank account, which they're then using as either the deposit or to make the full payment for the transaction. So title doesn't ever have to know where that source of funds is coming from or how, or that it came from crypto, as long as it's been seasoned in the bank account for about 60 days. So our contracts are written in dollars and they settle in dollars. So there's a few little steps that we'll probably get into that that separates it from a normal transaction, but at the end of the day, the way it closes is no different than how we close every single day.
Right. And then, Ricardo, can you talk a little bit about how the title company does handle these deals?
Yeah, so I think, from a title perspective, as Eric was saying, we've done dozens of transactions where buyers have crypto, but they end up liquidating their crypto to pay in cash, which is really only a strategy that is available to foreigners that in their countries may not be subject to capital gains tax, but mostly for people who don't know what the options are, like the crypto mortgage, right, and like leveraging the mortgage. So from title's point of view, you read a lot in the paper about crypto transactions, and as we've been investigating, most of those transactions have actually not involved the real estate asset itself. They've involved either shares in an LLC or something of the sort. At Folio, for over 5 years, we've been working to try and become basically a pioneer in providing services for crypto closings, including title insurance. Right now, crypto closings that are crypto to crypto, wallet to wallet, really are not insurable. So most of the transactions, when they act as cash transactions, they get a normal title insurance policy and they close normally. Where we see the big window opening is in transactions that can leverage crypto and that sellers want to accept crypto. Eric the other day gave the statistic that on the MLS, I think you said 470 something listings say they accept crypto.
Yeah, I think it's $500 million. That was gonna be a pop quiz question. I was gonna give out some free Bitcoin, but there's $500 million on the South Florida MLS residential, where the seller agent is saying that the seller will accept crypto. 99.9% of those agents have absolutely no idea how to execute. And I hope that after this discussion, you guys will all have some idea of how to execute these type of transactions.
And so from our point of view, being a partner in the transaction that is versed in how these work, and if we can provide that additional layer of protection and title insurance, we think it's a game changer.
And then Colin, can you talk a little bit about how, what Milo does and how that kind of fits into it?
Definitely. So a lot of these clients that we work with, we focus on doing mortgages for clients that have crypto. A high portion of them have Bitcoin, probably 95% of the loans we do are for clients with Bitcoin. And in the end, what they don't want to do is sell their Bitcoin. So they want to buy a property, they have a lot of Bitcoin, but they don't want to sell it. So what we offer is an option for them, rather than liquidating their Bitcoin, turning it to dollars, sending it to buy the property cash. Two things that are going to happen there is, one, capital gains. So a lot of clients have been holding Bitcoin for 10 years, and they bought it for $2,000. So when they sell their Bitcoin, they're going to have to pay, depending on the state and all that, but like 20 to 30% of what they sell in taxes, on capital gains taxes. So that right away is a huge deterrent from someone wanting to sell their Bitcoin to buy a property. But number two, which I think is even bigger, is that they believe in it, right? They've been holding it for a long time. You don't have to convince someone that has Bitcoin that Bitcoin is a great asset or that Bitcoin is going to appreciate. They really believe that, and a lot of times, a lot of their wealth is like very deeply tied into the fact that they own Bitcoin. So they are more faithful to Bitcoin than they are to real estate. They think it's going to continue to appreciate. If anyone here is in crypto X or Twitter, Bitcoin's going to be $1 million. Bitcoin's going to be $10 million per coin, and you don't have to sell a client on this. A lot of times they really believe it. So by using it as collateral to get a loan rather than selling it, they're able to hold on to that upside. So for example, if a client gives Milo 10 Bitcoin for a mortgage, we give them a 30-year mortgage. If they pay our mortgage off in 5 years, 10 years, whatever it is, they get 10 Bitcoin back. If that 10 Bitcoin is doubled, tripled, 10x, whatever it is, the client gets to keep all of that appreciation. So we're basically giving them an option to purchase real estate without giving up their Bitcoin. They're able to have both. So that's the pain points that we solve, and the way we do it is by providing 100 LTV mortgage on the property. So if they wanted to buy $1 million property, they could post Bitcoin with us. We would give them $1 million mortgage, 100 LTV. That prevents the need from selling any to make the transaction happen. We're a licensed lender. We're putting cash into the transaction. As we were talking about, no sellers are getting Bitcoin. Like the seller could go through the whole transaction without even knowing, what really we're doing or the client's doing. We're ordering appraisals, working with title. All that is standard with the mortgage, but the client is able to retain their Bitcoin and, purchase a property. And
then what kinds of rates do you offer? Is it comparable?
It's a little bit higher than if you were going to get like a traditional mortgage, put 20, 30% down. I will say there's kind of three really important things that I think clients need, like their pain points, which I discussed too: capital gains and believing in the asset. But the third is qualification. A lot of our clients have a lot more assets than they do income. So on top of that, Bitcoin and crypto is really not accepted. Like if you, as Eric mentioned, seasoning, like the reason you have to season is because if you go into a mortgage company, and you're like, hey, I have $1 million worth of Bitcoin. I want to buy $1 million house. They're like, okay, get $1 million from elsewhere. Like, I can't see it coming into your bank account. Even if you sell it and turn it to cash, I don't want to see it. Like, I can't use it. So it's you know, they're just not really welcome through traditional financing. So we're able to do really unique solutions to help them qualify for the property. But assuming someone was going to put 20-30% down, you know, you could probably get anywhere from like 6 to 7%. You know, our rates are going to be, depending on client's portfolio, anywhere from like 8 to 9%. So probably, you know, 2% roughly higher than a traditional financing. You know, so if I was putting on my sales hat, I would say, you know, your capital gains are going to be 20-30%. You know, annualize that over the 5 years, 7 years you might live in the property, and it's going to make up for that slightly higher interest rate.
Plus the appreciation.
Plus the appreciation is not even being considered there. Yeah.
I want to add to what Colin is saying, because there's 6 ways that I've executed these transactions. And before I give you guys all the actionable insight that I have about how to actually execute, so you can actually leave here and make some additional money, I want to tell you why I'm here. I've had my license, my real estate license, for 15 years. I come from the music industry. I'm a recovering music executive. I work with some of the biggest artists in the world. For the first 10 years I had my real estate license, I closed like basically no deals, like maybe 1 or 2 deals here. And maybe some of you in this room are in that same type of situation. Post-COVID, I was at a blockchain meetup at a friend's like mansion. And I come from the blockchain crypto space, but I didn't really tell anyone. I was kind of embarrassed. I was a real estate agent. I was making money in other things. And someone at the event came to me and said, hey, I heard you're a real estate agent. I have this situation. Can I talk to you in the back room? So immediately I was like, all right. I was about 4 cervezas in at this point. So I was like a little. So he goes, Eric, I'm worth $50 million in Bitcoin. It was actually, he's like, I'm worth $50 million in Bitcoin, but when I walk into the banks, I'm the worst customer. I haven't paid my taxes. I'm not snitching on him, but this, you know, I haven't really paid my taxes. I'm crypto rich, cash poor, which is a lot of my clients. I haven't had a job in 15 years. I haven't needed a job. So I'm the worst client when I go into a bank. They know how to blow Bitcoin. This is, of course, you know, before Trump got elected, and banks would get into that. But they were like, you know, the banks don't understand Bitcoin. Can you help me out? So, of course, I immediately put my cerveza down, and I sobered up really quick, and I did what everyone in this room should have said to this gentleman. I completely lied to him. I said, of course, I can help you out. I had no freaking idea how I was going to help this customer out, but I knew because of my background in blockchain that I would, if no one could figure out the solution, I could. Sure enough, a week later, another gentleman in the crypto community, very small community, worth a lot of money though, $4 trillion, came up to me and said, Eric, I heard you're working with so-and-so. I'm in the same situation. I also haven't paid my taxes. I'm also crypto rich. I'm worth 70 million in Bitcoin. So now I had 2 customers that were worth over $100 million of Bitcoin, and they were looking for me to come up with the solutions. And I came up with the solutions for these 2 individuals, and since that drunken meeting at this house 4 years ago, I've executed over $20 million of transactions. Again, for the first 10 years, I was closing like nothing. And recently, I've been like 14 or 15 transactions a year. Here's how I do it. There's 6 ways. The first way, Ricardo already touched on. You sell your Bitcoin. None of my clients want to do that because you get a capital gains tax of 15 to 30%. The other reason, as Colin mentioned, all of my clients who are in Bitcoin believe that Bitcoin will appreciate faster than property, will appreciate greater and faster than property. Historically, for the last 15 years, Bitcoin has been the greatest appreciating asset we've ever seen in our lifetimes. Probably will ever see in our lifetimes. It's appreciated at 60% year over year for the last 15 years. There's no asset that beats it, number one. The second way that my clients, so they don't do that. Primarily, some that were worth 50 million may have sold a little something, but the second way, which Colin, both Colin and Ricardo touched on, is that there are crypto lending platforms. Milo is one of them. There's about 4 or 5 other crypto lending platforms outside of the banking system. These are not FDIC insured banks. They're platforms. They're companies. They're startups. They have billions of dollars under management, but they're still startups. They offer 30, 50, and 70% loan-to-value loans on the crypto. So if my client wants a $1 million property and he has $2 million of Bitcoin, he can do a 50% loan on Milo or any one of the, I believe 50%, correct? Or any one of the other crypto lending platforms out there and get a 50% loan in 24 hours, maybe even less, without a credit check. So he'll have $1 million wired into his bank account or $1 million of stablecoin in his crypto wallet, which he can then use to either buy the property outright if it's $1 million property, or if it's more than $1 million property, he can do the third option, which is he can use it as the down payment on the property, and then he can come to me to get a non-QM loan. That's the third option. So it's selling your crypto, the first option. Second option is a crypto loan, which is what most of my clients do because they don't give up the asset. They can recognize the appreciation of the asset once they pay that loan back, which is anywhere between 8 to 16% of interest, which is expensive, but it's cheaper than them paying capital gains and certainly cheaper than them missing out on the potential appreciation for Bitcoin. Of course, Bitcoin can go down. The third way that my clients do it is the hybrid approach. They'll do a crypto loan for the down payment, and then they'll get a non-QM loan. There's only one bank in America that I've dealt with. I'm also a licensed MLO, a mortgage loan originator also, in addition to being a realtor. But they get 30% down payment on the property, and then they can get a 70% non-QM loan on the property. The one bank that I deal with, and I think there will be more that'll come into market, they want to see that the client can afford to pay off the property, that they have the amount of Bitcoin to pay off the property. So if it's $1 million property and they're putting 30% down, what's that, 300 grand, they want to see that the client has at least 700,000 in Bitcoin to buy the property. Previously, they wanted that money liquidated. They wanted that Bitcoin sold, which means they would pay the capital gains tax on it. Now, because of new regulation, they don't have to sell the Bitcoin. They just have to show that they're holding Bitcoin in like a Coinbase or a Gemini account, which are two exchanges in America. That's the third way. The fourth way, which doesn't exist right now, but it did when I started doing these transactions, and I think it's going to come back, is an asset-backed loan. There was another broker that they would take 90% of your client's crypto value, and they were looking at Bitcoin, stablecoin, and Ethereum. They would take 90% of that value, and they would divide that by 84 months, 7 years, to give them a monthly income value. So let's just say your client has $1 million of Bitcoin. They're taking 90% of that, 900 grand. They're dividing that by 84 months, which is $10,700 of qualifying income that they can qualify your client if they don't even have a job. And they could stack income. So if they're driving Uber or doing other things that wouldn't qualify them with just that salary or that income for the loan, they can stack that on top of that $10,700. So that's the fourth way. Fifth way is Milo, who not only does crypto loans. They also offer a crypto mortgage product, which Colin just spoke about. They're the only company in the world to offer a 30-year mortgage product. Unlike the crypto loans, which are 2-to-1, 3-to-1, and 70% loan to value, they offer a 1-to-1, as he mentioned. So if you want $1 million property, you don't need $2 million in Bitcoin. You just need $1 million in Bitcoin. But they're going to take a lien position on the property, that 30-year lien position, and they're going to custody the crypto. The crypto lending platforms do not take a lien against the property. They don't care if you buy bananas with the loan, education, or if you go buy Miami's finest white powder. They really don't care what you do with that loan because they're not taking a lien position on it because they're double and triple, sometimes triple collateralized. And then the sixth way, which my clients completely steer away from, but it's actually the best way, is through DeFi, decentralized finance. So I can go take loans out in a peer-to-peer basis online without ever knowing who the lenders are or group of lenders are, using an algorithm, using computer code, where let's say anyone in this group, let's say Andres, I don't know who he is, but he's on a platform, a decentralized finance platform. He's willing to lend me at 4% rate, which exists in DeFi. He will lend me at a 4% rate. I will collateralize my Bitcoin, which is going to be held in a smart contract via computer code. I get that loan from Andres. I don't know it's him. It could be Andres. It could be everyone in this room that's contributing to that loan. And when I pay that loan back, I get my Bitcoin back. The only reason why my clients shy away from that is that as much as we scream about loving decentralization and cutting out the middleman, when you're taking $1 million or $2 million loan out, most of my clients, I'm sure most of all of Milo's clients, want to be able to get a hold of Colin or someone in the middle or someone in the middle of that loan transaction. So those are the 6 ways that you can execute crypto transactions.
Did everybody get that? What?
Oh, I'm sorry. If you didn't get that, I have a course, cryptocurrencyrealtors.com. Avanti 80, yeah, I did this on purpose. Avanti 80 is the discount code. It's $100, okay? You get 4 hours of continuing education credit. I don't want to be a shill. Cryptocurrencyrealtors.com. And if you don't fall asleep, by the end of this, I'm going to show everyone how you can get $250 of free Bitcoin right now. If you don't fall asleep and you don't leave. So if you're leaving right now, you're missing out on $250 of Bitcoin.
What are the risks with the last option? Are there?
Yeah, sure. there's code being hacked right now, like literally, like there's some malware that was put in the code, and they told everyone not to do crypto transactions right now. I don't know if you saw that, literally as we're sitting there. So whenever you're dealing with computer code, there's the ability to get hacked, right? You're not dealing with, there's no Bank of America to call, there's no customer service, there's no Colin to call, there's no Ricardo, there's no one to call. So yes, there's hacking that can happen. I don't even want to get into SIM swaps and all that stuff, but be careful on the links that you click, and please have two-factor authentication on all of your phones. And you're a real estate agent, so forget the crypto aspect. You're dealing with very intricate financial information. All of your email systems, your phone should have two-factor authentication. Google Authenticator, just download it and make sure that all of your apps are connected to it. That's a double layer of protection against SIM swapping and other things that could potentially happen to your pertinent financial information.
We'll have questions at the end. I also want to ask, I think you alluded to this a little bit, Ricardo, but foreign investors, I mean, in Latin America, who maybe are, they can bypass banking regulations, or it's just more stable to have cryptocurrency. Can you talk about that as, a great buyer pool that everybody can tap into?
Yeah, I mean, crypto is great, has great features in economies where there is a lot of currency risk or not a lot of currency stabilization. Argentina has a large amount of crypto from, in Argentina. Bolivia, for example, with what they're going through now with their problems to exchange in dollars. So there's a lot of people that live in these local economies that have tried to stabilize their savings and put them into not depreciating assets or currencies. In the 1980s, when Miami was booming with international money, excluding the drug money, a lot of people came to put their savings into Miami because they were dollarized. So most people, when they were making decisions about how to protect their assets, weren't even looking as much into the potential returns of real estate as much as in the protection of their asset value. So today, with stable coins, which are a type of crypto asset, a type of digital asset that is actually backed by dollar-denominated assets, the way the US dollar used to be backed by gold. There's a lot of people in international markets that are able to access stable coins, and now those stable coins can be traded and they can be brought here. So, Folio works with different crypto partnerships, and one of them is a platform that will convert a stable coin to cash. And so a lot of people may have local currencies that they want to preserve their value, and they don't know, or they cannot, as in the case for many years, for example, in Argentina and many other countries that had export controls on the currency. Now they have a vehicle to be able to turn their local currency into a stable one and actually invest in real estate. Now, with the value of the crypto assets as they are now, after it had really taken a hit in terms of value, you're starting to see a huge push from international cryptocurrency holders to begin finding ways to diversify out of crypto, right? The crypto has grown to very large amounts. Colin and I are working with some clients that started buying crypto in 2012, and they have over $1 billion in crypto assets that are just sitting in cold wallets trying to find a home. They're thinking, well, it may be time to diversify. So diversification, and I know many of you in the room went to Enrique's investment course and to the FIU investment course. You guys know that diversification is a huge driver of investment returns in people's portfolio and institutions' portfolio. The crypto assets in today's world, I think, have become more mainstream and are going to be subject to those rules of diversification and stability themselves. What we want to do, and what we are doing with partnerships like with Eric, with Milo, is where Folio can come up with the first true product that you can go from crypto to property in a very simple way, including an insured transaction. And that is what we're working on with these partners.
Does everyone know what a stable coin is? I feel like maybe they don't know what that is.
Sure. Yeah, I mean, a stable coin is as Ricardo mentioned, it's just backed by US dollars. So like Bitcoin, Bitcoin's like $112 $112,000. Say it goes up and down every day. Bitcoin is the price of Bitcoin. A stable coin typically is $1. So like a stable coin is always $1. It's not going to appreciate. So you're not buying it to have that asset appreciate. You're more buying it to be able to use the blockchain rails. So, it is common in a lot of a lot of Latin American countries where clients, they don't trust their currency, right? They don't trust whatever currency their government is providing to them. So historically, you couldn't get dollars if you were that client. Like, you can't just walk into the bank, be like, hey, give me dollars. I don't trust this. Like, no, you can't. So now you have the ability to buy basically dollars, through stable coins and not have to go through the pains of like getting dollars from a bank. So you're able to keep your assets in dollars. A big thing of that is like currency inflation and all these different issues that you see happening around the world. So being able to a client to have their money held in dollars is really important for a lot of them. As I mentioned earlier, the challenges that we have with clients with crypto, there's like a fourth pain point that comes up really big with clients from Latin America, and that is just sending money here, like getting money from wherever they are to the US. It's extremely complicated, especially if that money is already in crypto or stable coins or Bitcoin, because like they have to take it from their wallet, they have to put it into like a third party exchange type place and turn it to a currency. In some cases, they can't even turn it to dollars at that point, then send it to the US. Or they could try to send it to a US-based exchange, but a US-based exchange is going to give them a really hard time with onboarding. If you just reach out to an exchange and say, hey, here's like $1 million of Bitcoin, they're going to they'll be like, okay, hold up here. What's going on? We need to look into you. We need to look into all of this. So it's really, really complicated. And we do help clients through this process. So, we give them a lot of different options of ways to purchase real estate in the US. Our main one is obviously through a mortgage, but there are loan options. There are options also to just send Bitcoin, have it liquidated, turned to dollars, and sent to a US bank account. So there's a lot of different services like that these clients do need due to the challenges that they have.
So one of the things that clients in cryptocurrency deal with is the duality of privacy and security. There's a lot of crypto holders across the world that don't want their governments to know that they own these crypto assets. Some countries have more lax enforcement standards in their tax collection systems than others. There are other countries that are very, very strict and very professional in the way that they control their tax base. Colombia and Chile and Latin America are very strict, well-run tax operations. So in those countries, people are really, really careful about the way they manage their assets and what they report to their government. So a lot of people traditionally, correct me if I'm wrong, want crypto for privacy. In real estate, privacy can be an issue because most US-based financial institutions are required by law to have know your client protocols and to run clients through anti-money laundering, AML standards. And so privacy and security have not always been friends. And those of you who have worked with FOLIO Title, you know how obsessed we are about security, because very sophisticated, international, organized cyber criminals have pinpointed real estate closings as a target-rich environment to steal wire transfers. Crypto transactions can actually be much safer, but it requires you going through the motions that may reveal that privacy. So there's all these issues around actually getting that cryptocurrency into the financial system and be compliant with the laws to be able to purchase assets, especially if they're leveraged.
So does it depend on the country where it's coming from? Like if you're coming in from a different country, you have $1 million in crypto.
I think that question is more relevant in country. So there are people who treat their crypto, they treat their attitudes towards their tax authorities differently. For example, I would presume that most of us in this room have a very, very high level of respect for the IRS. You don't really want to mess with the IRS. You don't want to do that. There's huge liability to do that, right? In some other countries, people think that their tax authorities aren't as on top of things, so they treat them with, let's say, a little bit less respect. But from a U.S. point of view, we're all subject to the same compliance laws, right? So especially if you're using a financial vehicle like a mortgage, you absolutely need to go through these security verifications and know your client standards.
We have a question back there.
Yes, I just want to know if I'm ever in one of these transactions and a buyer wants to pay with Bitcoin, is the seller always obligated to know that it will be paid in Bitcoin? Or whatever, one of those 6 ways?
So let me say this, beyond the course that I offer, I'm here as a resource for all Avanti agents. So if any of you have any questions or complications, or you're fortunate enough to have this type of situation happen, I'm a phone call away instantly for any of you in this room. No, they don't. This, like I said, there's $500 million of listings right now where the seller probably doesn't even know that the agent put that there, where the seller's accepting crypto for the deal. The seller doesn't have to accept crypto because that buyer can leverage or sell or essentially take a loan out against their crypto to pay for the property.
No disclosure. There's no disclosure requirement.
No disclosure. If all smart sellers are accepting Bitcoin, there's 4 or 5 developers that I'm consulting with and working with that are accepting some of them are in this room right now that are accepting Bitcoin for the transaction. So if I were you, I would call the agent and say, does your seller own the property outright without a mortgage? Because the banks are still not going to accept it, although that may change very soon. If the answer is like he owns the property outright, will he accept Bitcoin for the transaction? You're adding a little bit more complexity to the deal. You'll have to get him involved on the title and insurance side, but it can be done. It can be executed.
Yeah, you're going to do an as-is transaction that is denominated in dollars. You're not doing an as-is transaction denominated in Bitcoin. Bitcoin is the source of the funds. Now, if the buyer is going to take out a loan, which of the 6 mechanisms are they going to use to get that Bitcoin, into the deal? If you send an as-is contract as a cash deal, the cash has to appear in the bank account and eventually transferred to the title company's escrow to be able to execute the transaction. But to my knowledge, if you use the as-is contract, it's either a deal with no financing contingency, which the contract defines as cash, or a deal with financing contingency that becomes a cash deal after the loan approval period, but the source of where that money's coming from doesn't need to be revealed. Now, a very interesting point that we've looked at with Colin is what many sellers do require is if you're going to send a deal with a financing contingency, they want some kind of pre-approval. So I'll let Colin talk a little bit about that.
Yeah, I get this a lot because, I always kind of make a joke that sometimes the first time I have to do is sell the client on our services, and the second thing I have to do is sell the listing agent or the seller, on what we're doing. But in the end, with any mortgage with Milo, we are actually sending 100% of the transaction to title. So Milo is funding the transaction on $1 million. We're a direct lender. We fund with our own capital. We're sending $1 million to the title agent. So it would be the exact same thing as if the client was going to send 20% of their own money and the lender was going to send 80%. So everything like that is the exact same for the seller. They could technically go through the whole transaction, without having any understanding of Bitcoin being involved. We think it's cool and we think that it's important to spread the word. So we do pre-approvals on our website. You can go on, the client can get pre-approved in under 10 minutes. And it does say, we have some reference to crypto and Bitcoin on our pre-approval. And we think it's great to spread the word, which is why we put it there. But we don't get really any pushback, to be honest. We've done right now probably over $85 million worth of Bitcoin-backed mortgages over the past 2-year period, and we've never had a deal that the seller was like, no, you can't use Milo. It's like, do you want to sell the house? I'm sure the market, everyone knows the market's kind of shifted from the past few years, where if people are getting an offer, they're very likely to accept the offer. And when we talk to them, I always explain, hey, look, this client could buy this property cash if they wanted to. To be honest, they're probably one of the most qualified clients that you could have walk through the door. They just don't want to buy it cash. They're using a mortgage, but they could. So, we never have any pushback on that side from sellers.
I want to add, I definitely want to get to all the questions. I want to add some perception to what he just said. And I want to reiterate, crypto loans do not go on the credit report. So a crypto loan does not show up because they're taking the collateral as the crypto, so they're not running credit on you. That's why clients are able to take a crypto loan out as well as get a mortgage, because the mortgage company doesn't know, as long as you've seasoned that down payment for 60 days, the mortgage company doesn't know or is not going to ask where those funds came from, if it, crypto loan or whatnot, as long as it's been sitting in the bank account. If your client takes a crypto loan out, which mine did, 3 days before the property is supposed to close, the transaction is supposed to close, the underwriter is absolutely going to ask where that money came from, and you're going to have to delay your closing. So I just want to point that out there for everyone in the room. Other things that I want to talk about.
For mine, just real quick, if you want to avoid all of those headaches, you can just reach out to Milo instead.
There you go. Good transition. Residential transactions, most of our clients are staying in their property for 5 to 7 years. That means you're probably not going to have repeat business with that customer for another 5 to 7 years. And my niche is in the riches business, as Ina said earlier. My clients are transacting almost every 3 years, 3 to 4 3 transactions on average per client within a 3 to 4 year period. Why? When Bitcoin goes up, Eric, let's get a bigger mansion, let's rent that one out or sell it. When Bitcoin goes down, because their liquidity, their net worth is based on their Bitcoin appreciation or the value going down. Eric, I can't afford to stay in this property anymore. Can you sell it? I don't care if I'm working on the buy side or the sell side. These are transactions that I'm getting. And that's why I absolutely love the cryptocurrency niche market for real estate, especially in Miami.
We have a question right there.
My question to you, Eric, is I didn't understand, all the 6 methods which you explained earlier. Some of them, most of them are using Bitcoin as kind of collateral to give the loan, whether it is in stable currency or in dollar value. And like any other currency, I mean, Bitcoin fluctuates more than any spot market in the world, so what is the margin associated with to ensure that Bitcoin is, your collateral is protected, and if that margin has any kind of haircut based on the origin?
Yeah, great question. Gentleman, what's your name? Sukumar was asking about the margin call on the collateral, because again, the crypto lending platforms do not take a lien on the property. So they can't go after the property or your bananas or whatever you bought with that crypto loan. So if the value of the collateral drops below 30% or 50 or 70%, you're asking what's the margin call and how does that work? Well,
Or do you do mark to market?
well, I'm a schlubby realtor like you, so I don't do any of this stuff. The crypto lending platforms, and Milo is one of them, Milo offers the best margin call for their crypto mortgage. I believe it's a 30% margin call because they're also collateralized by the property. So if the $1 million loan, the $1 million of Bitcoin you give to Milo and they give you $1 million loan, if that Bitcoin drops to $700,000, you're going to get a call from Colin to say, hey, give us some more Bitcoin to bring your margin back up closer to that 1-to-1 ratio, or we're going to liquidate it.
It'll be the opposite, actually. It would have to fall to 300K. So it would have to fall by it's actually 65%.
Oh,
so
you changed that on me?
So yeah, it's been for
Breaking news.
Yeah.
Breaking news.
So for us with the mortgage, the cloud would have to fall by 65%. So if you post $1 million worth of Bitcoin, that Bitcoin would have to be worth $350,000 for there to be a margin call. So, we've built it. We try to make it really safe for clients. Our goal is to help clients with Bitcoin purchase real estate. We don't want to put them in situations where they feel like their collateral is at risk. As of today, anyone that falls Bitcoin, that's like a 40,000 Bitcoin. That would be a pretty large fall. But to just kind of help answer the rest of the questions about different loans and different lenders, Eric had earlier mentioned there's companies that offer like a 30% loan, a 50% loan, a 70% loan. And it sounds great, right, that you can get 70% of your collateral on a loan instead of 50, but all that really does is it just tightens your margin call. So, if you really reverse engineer it, if you give $1 million worth of Bitcoin and someone gives you 500K cash, they're never going to let that loan go under 500K, or else you're never going to pay it back. So basically they have a point that they're going to sell your Bitcoin, and in most cases, they're going to give themselves a buffer of 10 to 15%, depending on how it works. And some places are even more. Some places will give a buffer of 20, 25%, so that technically the lender can never go upside down. The thing that sucks for clients is if it gets to that point, a lot of places may give you 24 hours to either pay the loan down or put more collateral in. So you could get in a situation that, this Bitcoin, your precious asset, it gets liquidated because Bitcoin has depreciated to a liquidation point.
Yeah, there's something very important about your question that has to do not only with the margins, but with the volatility inherent in any currency. And so I'm gonna say something, hopefully these guys would agree, and if not, please jump in. And I don't wanna confuse anybody, but when we're talking about cryptocurrency in the context of real estate, especially when we're talking about leveraging cryptocurrency, you cannot think about it as a currency. It's an asset. It is an asset that's being leveraged. The inherent nature of a currency includes volatility. And so your spot price, you're never going to hit it. So any normal person analyzing this would say, well, then how many Bitcoin do I need to actually buy the house if the value is always changing? When you think about it as a currency, that's a logical and reasonable explanation. But when you think about leveraging an asset, there's different things that you can do to ensure that the value of the asset that you're trading, that in this case is a cryptocurrency, will cover the dollar amount that you need. One way that you could do it is that you do not have to put up all the money at the same time necessarily. In a normal transaction, you don't put all the money up front. You first put a deposit and then you put a cash to close, and the bank sends you a percentage of that at closing. If you're dollar denominated and your contract is in dollars, you know the amount of dollars that you need. If your contract is dollar denominated and you're going to put Bitcoin transfers, especially when you're going to liquidate them, usually happen within 24 hours. And so the amount of currency risk, the amount of volatility that you may experience is severely minimized. It's not as large as you think, because you're not putting up the Bitcoin 30 or 45 days before necessarily. Now, if you're going to get the crypto mortgage with 100% loan to value, when do you actually have to deposit the Bitcoin?
Yeah, we usually will do it pretty similar to when you're going to send the cash to close to title. So like a week before, it depends on the situation.
Yeah.
And at that point, if you get $1 million mortgage, a week before you're going to send us $1 million worth of Bitcoin. We're going to lock it in. Like, you sent us 9.2 Bitcoin. This is the collateral for your loan, 9.2 Bitcoin. And that's how it sits.
Maybe we can take it out of the maybe I'll call you separately.
Yeah.
Because what I'm trying to understand is how you hedge your position. Because one side, your volatility is there in the real estate asset. Your cash actually value fluctuating, and also Bitcoin. So how do you really protect your, what you're lending? Yeah,
I get this question a lot. And for us, we feel it's actually a very unrisky position, and we would love to give lower rates. The reason that our rate is slightly higher than traditional financing is not because it seems like it's a riskier deal. It's just a cost of capital. If you're trying to compete with Chase, who gets money for free, or Fannie and Freddie back loans that are slightly subsidized by the government, it's tough to compete with that. So the reason our rates are higher is definitely not risk. If you reverse engineer it, we have $1 million on a $1 million home. We have $1 million of our money out, and we have $1 million home, and we have $1 million worth of Bitcoin. So there are $2 million worth of assets that are involved in our $1 million mortgage. And we feel comfortable that combined those assets are not going to fall under the value of our loan. And there are margin calls involved that would protect us, in the event that Bitcoin did depreciate. But again, it's a very large depreciation just because how comfortable we feel with our loan amount against the assets that we have the loan against. So there's no hedge, but we feel that we're very protected in the amount of assets that our loan is out against.
Thank you.
Yeah.
Free Bitcoin. Take your phones out. I'm dead serious. Take your phones out. Usually I do this during the class. If you text me, this is my personal number, an hour after or 2 hours after here, I'm going to text everyone how you can get up to $250 of free Bitcoin, which pays for your event here and even pays for my course if you want, and maybe even the gala, although I don't know what they're charging. But Bitcoin will be high by that time, and it'll probably pay 3 times for a gala. 732-501-0634. 732-501-0634. Text me your name and your brokerage. Hopefully you're here. If you're not with us, you better join us, or I don't text you how to get the free Bitcoin. 732-501-0634.
Okay, all right. Well, thank you all so much. And stick around, because I think we have one more, right?
Yes.
Okay. Thank you.
Thank you, everyone.
Alrighty, that was amazing, guys. To put that last piece into perspective, the real estate market in the United States is about $60 trillion, and there is $5 trillion worth of cryptocurrency out there. This is a huge market. It's 10% of what the United States has. So we encourage you to start engaging your clients, and there's going to be a lot of unknowns, but call Ricky. Eric is part of our company. They will be able to walk you through these types of transactions. So I'm going to try to play the video one last time. It didn't work. Okay, it didn't work. Now we have a beautiful networking event. We love all of you to meet. I know some of the people from Orlando are here, from Boca. Network, connect with the people, and see how you guys could exchange business. There's a lot of people from Miami wanting to move to Orlando. A lot of your investors in Orlando, so take advantage of speaking to them. Thank you very much and enjoy the drinks.